So now I think we can get into your journey and my journey on how we view this is how we view the world. We've recognized those problems that we've just
and we're all battling these in different ways, different bases that we sit
But
on.
I think because we had our journey, 2-3 years ago, you and I are personally battling with those realities of the world far differently to the average person, because we recognize them and we decided to operate with our money in a different way.
Yeah.
And you have for a significant portion of time invested and understood investing. So in terms of your personalization, what is your thinking? You've talked about your hurdle rate.
Yeah.
How did you come across Bitcoin? That's going to be our first part of this. And then we're going to go into the technology and the clarity around what Bitcoin is, why it exists, and distilling myths, and as well as promoting the facts to it. But we're just, for now, going to discuss our personal journeys on it, because I think ours has been very different. I might lead first with what I did, and then I'll ask about you. So when I came across Bitcoin in 2017, dismissed it. 2018, dismissed it. I don't want to talk about it. I don't care. It's a Ponzi. It's stupid. That's what I told people.
Yeah.
We met 2 years ago, and I think I probably said the same thing to you. Or I was very confused as to, I was like, yeah, but doesn't it continue to inflate? Like, doesn't that just inflate too? Like the nominal bias, not understanding the scarcity of it enough. I dismissed it. The ETFs got launched in America, and I went, regardless of what I think of this asset class, because of this fact, it's going to be in the American markets. Money will flow in regardless of whether it's right or wrong. Therefore, I will buy some. And I put, some money into it, a significant portion of my savings into it, and then started learning about it. Then read these books. Then from there, the more I read, the more I realized the problems with the world. I just dumped my entire savings into Bitcoin. This was midway through last year. And in that time, it has doubled and my conviction has grown. But my conviction was like, I don't care. I'm not playing in that world anymore. I hate it. I don't agree with it. It has horrible outcomes for people, individuals, and I refuse to participate. I was screwed over in the stock market in a couple of penny stocks, trying to make my money work for me, trying to invest, and realizing that there's manipulation. You're at the mercy of one person who can do something or say something. And then there's people behind the scenes that know more information than you, the insiders, and you'll never outcompete them in some aspects. It doesn't mean that you can't have an asymmetry and make money. And I still do participate in those markets. But for me, Bitcoin was the thing where I was like, this is the one true pristine asset, and I can stand behind it morally, ethically, economically, incentives wise, and be content, even if it goes to zero, that I'm content that I stood behind an idea that I believed in. That was my journey on it. And I continue to buy Bitcoin to this day, even though it is at 170,000 Australian as of today, and it was 186,000 last week. And 6 months ago, it was 110,000 Australian. So your journey, I'm assuming, is going to be a little bit different to mine, because it was a much lower price when you first jumped in as well. So did you, whatever you want to share with that?
I'll probably go back even further. I think I mentioned earlier in previous episode, if it is, or just earlier in the session, that I've always been someone who wants to get my money to work for me, as I was a saver, because my mum did deal with hard. So growing up, it was a lot of what we didn't have and I saw others have. And you sort of say, why is that? So you sort of, that incentive and that drive to sort of always, if you can save and then put it to work and learn that's a strategy, live within your means and put it to work, does help. It was never, debt came on the scene when sort of property got involved, and because I was an investor in property and when I was younger days, and that appreciated over time. So similar to you around equities, you're trying to, when you're investing in shares, that became of interest because shares is quite and continues to play a portion of what I do, but a lot significantly small portion comparative to my
Getting
time.
smaller and smaller because of the gains and
just my time as well and the energy that it consumes. You know, I could have a small investment in a company, and just to keep up to date with the information and the analysis around it, you know, it requires many hours. And if I replicate that across, let's say, you know, 6 to 10 companies that I have as a following, that takes time and energy. And that's the beauty of Bitcoin. When we get to the attributes that it has, you know, it's
trustworthy.
There's real simplicity behind it. And I think that's a real strength of it. But just my interest in equities, because Bitcoin didn't even exist. Like I said, I'm a 51-year-old. So going back when I was 18 and in my 20s, and, you know, getting real exposure to the share market, it was something real exciting and you know, real high energy and so I want to explore. So like you know, we make mistakes and you want to make them early, and some of them are more significant than others. And then you have some, you know, good outcomes. But as I matured and sort of got into my 30s and children came along, you know, your perspective of the world changes a lot, right? And your future, you sort of say, okay, what is that going to be looking like? And how can we provide a world that's better for them? You sort of look for, okay, what is the formula in shares that you can sort of look for that can give you the difference to think not short term, think long term. So I wasn't looking for the price to move by 5 or 10% in a week. I'm looking for, you know, doubling or quadrupling over a period of 3 or 5 years. So you start looking at that. So a lot of the attributes that I learned in basic business economics functioning really has formed the basis of what I'm looking for as a good investment, an investment strategy, like we talked about originally. So, you know, when Bitcoin comes along, I never gave it the time because I never thought of it just like a company gets created by people, because that's what a company is. It's a group of people that have something special that they're working through, and it can be profitable. It's moving to profitability with growing margins. Bitcoin is essentially something created by people. It's a community of people. You know, you might see a gold coin or that, but it actually isn't a gold coin at all. It's just it's a ledger, and you have access to a portion or a multiple number of Bitcoin because you know, you went and purchased and you've got a right to that, or you know, that's access, and you're the only one with those keys that have access to that portion. So the attributes of shares really enabled me to look at an investment strategy. And I came across Bitcoin 2016. A friend of mine, or my son, was playing soccer, and a dad was sort of into it and said, "Come have a look at this." And me thinking I was really cool, just pretty much shat on it. You know, and
especially coming from that business mindset that you were, an investing mindset. It's a really common way
very close-minded
to come at Bitcoin in exactly the same way as I did.
Very close-minded. And I look back and, you know, it's unfortunate because we all would have heard about it around that period and even after that. And it really wasn't until my older son sort of, you know, in 2019, 2020, we sort of sat down and had a chat about it. He explained a bit more. I sort of said, you know what, I'll go have a look at this. And so I had bought some exposure. It generally was at the highs because things were running hot. You know, the number go up concept is very relevant where, you know, people do prick their ears at appreciation of the price of Bitcoin, or more importantly, the depreciation of the currency that you're dealing with, whether it be the US dollar or the Australian dollar. But yeah, that makes a big difference. But looking at its attributes is what really started to appeal to me, because when you don't have a central authority at the helm of something, that means you're taking away someone to just rug pull it.
Yeah, decentralization.
Correct. To make a decision that's contrary
to your beliefs and your ethics and the reason why you got involved in it.
Yeah, and for whatever reason they might do it. So just think about that for a minute. You know, the government can come out and come and say, we are now going to tax you on your third and fourth bedroom because you don't use it. $5,000 a year. That's exactly what they did with second homes. So people who had a holiday home on the Mornington Peninsula for decades now pay 20, 30, 40,000 a year in tax because the government just did.
Because they said so.
Because they said so. So that's essentially a rug pull, right? So you never bought it for the intention for it to appreciate to, whatever price it is today. Although that was a part of the equation, it was the enjoyment. It was the fact that you went down to the coast and enjoyed the warm days that existed, and you're fortunate enough and you took that risk. And the reward was you enjoyed that time and effort with your family.
So that's not a free market, right? And I mean, let's be honest. You also probably bought it for the store of value behind the thing too. But that's free markets. So when we talked before about the machetes, the black market is the true free market, because if you really want something, you can go on there and you can find it.
Well, the reality is the people who have machetes and using it for those reasons are never buying through legitimate purposes,
and they don't care.
And they're never gonna buy into the system of putting them into the bins, or very few will.
Yeah.
Like it's quite laughable, right?
It is.
I'd like to think our taxpayer money can be used more effectively to sort of recognize what a strategy is going to work and isn't. And, someone should be held accountable. And this is the other thing that goes back to, there's got to be accountability for a policy of that nature, and why it was made and why $34 million was spent, and what return we got out of it, is in the sense of that, are we safer because of it? Is this transpiring into us as a community, as a state, being in a better place?
I haven't heard one person say those machete bins are a fantastic idea, and they were a centralized idea. Someone created that and then did it, and we didn't get a say in it.
Yeah.
But with
it's a
Bitcoin,
knee-jerk reaction. Yeah,
back to Bitcoin, it's decentralized in its functionality, in that the network together decide how it operates. But let's go back on the train.
I think so. Looking at the attributes of investing into companies, you can take a lot of those, and like I said, the experiences that you have where you've invested into, whether it's $1,000 or $10,000 into a company and it's fallen in by half, which hasn't got prospects, because most companies really struggle. It's not easy. Business isn't easy because there are competitive factors, regulations, and they sell a story, but it's really hard to deliver. So when you lose half of your capital, you learn some really hard truths, hard lessons, and those stick with you. And so when you're building over time, you're building, okay, what is a strategy? One element of a strategy is that you don't want centralization, or you want to be able to trust strongly, and there's a record of trust in that CEO or that management group.
Yeah.
And in Bitcoin's case, as an example, there is no need to, you don't have a central point of failure where somebody can change. It requires a lot of consensus, and it requires a lot of agreement. And that's the simplicity of Bitcoin. I know we're going to talk about some of its attributes in a few minutes or in some time, but the attributes that it has gives me a lot of comfort, and that I don't need to worry and stress in the value of what I've bought, because its attributes hold true and it's very hard to change. And I think that needs to be respected. And every day that goes by, I see little reinforcements of that on my strategy being a tick, if you want to call it. So whether I wake up in the morning and to have housing affordability, we're going to, provide people 5% deposit with no mortgage insurance and relaxing of the laws, that really is a reinforcement of why I'm doing Bitcoin, because all that is that more money's coming into the system and we're not really addressing the real problem, and the problem's going to continue. So therefore, as more debasement happens, more currency occurs, more money will flow into Bitcoin, because it's the hardest form of money ever created, because it has true scarcity. And smart money and high wealth net individuals, as well institutions, we're seeing a lot of adoption, or a lot of money flowing into it. And I see that continuing. And we are very early in the phase.
So your journey on it, then you realized these aspects of it.
Yes.
And then you decided what? I'm going to buy some.
So yeah,
And then it evolved to
Yeah.
you buying more.
yeah, correct. And again, it's like anything. Take a position, learn about it more. You have a vested interest, and that grew. That grew in sort of 2020, and then continues to grow now. So what you're saying is, I'm a purchaser of it today. I've mined Bitcoin over the last 18 months and continue to be a miner to a lesser degree today, because I was interested in learning about the mining aspect of it. I'm a node runner. So I'm someone who sees the protection of the network as being fundamental to how it works. So we might touch on that in future. But from a personal point of view, my savings that I've been able to do has been redirected into an asset that can't be debased. So
Because it's finitely scarce.
Correct.
There's 21 million.
Correct.
It doesn't matter what portion of it you buy.
That's right.
No one's going to print more on you.
That's right.
No one's going to change the rules. No one's going to change the deposit limits. No one's going
That's right.
to.
And it's meant the way you can analyze and understand it is its adoption rate is growing. So it parallels are things like the internet or something like Facebook adoption or the Instagram. So they go on curves or S curves or power law curves. They're adoption rates. And all you don't need to know that detail, but the adoption rates are growing. And as long as the adoption rates are growing and its security of the network remains true, it's an asset that I want to own more and more of. And so, our family has moved to put pretty much 80 to 90% of our investable monies into Bitcoin, and we continue to do that, and want to preach that and give people hope that that is something that will be generational wealth and prosperity in many ways, not just economically, but in decisions. So by doing that, myself and my wife have been able to, when we sold our business earlier in the year, be able to not have to enter the workplace. And so our workplace is about, reading and educating ourselves more, but also looking at investment circles and speaking to a lot of people about our journey, but also about Bitcoin being something that really gives you low time preference. In other words, really gets you to think more broadly about what's happening and thinking long term. And I think we've done that. When my parents came, they had to think long term and had to be stringent and do the discipline thing over time. So I think we've lost our way a little bit like that.
As a society,
yeah, we're very short term and we're really, we've got to have a solution to this, but we're not addressing fundamentally what's really wrong at the base layer.
Yeah.
So, so my journey is around. I'm someone who believes in its benefit to society, and I think us as a country, if we were to look at having adopting Bitcoin in some way with our superannuation, allowing that for major funds or sovereign wealth funds, we would be a country that could enormously benefit, like countries like Bhutan and El Salvador are doing, who are small and needed to do it. But they're going to be the biggest beneficiaries because we are very lazy in our thinking, and we think we don't need that because we are very fortunate. We're very lucky, yeah. We are. Talking to a lot of people, they don't even understand the need for it because they can go and open up a bank account.
Yeah.
So I think my personal, adoption of Bitcoin is strong. Conviction of it is strong, but I also am enjoying the way I'm as a person, and I'm able to spend time. My uncle isn't well. My parents are in their 80s, so we're spending time with them and learning about them growing up. So we're able to spend time with people we love and time with my kids, and I think that's healthy for society. Like, I'd like to think I'm contributing in the right way because I want us to do the right thing to have a great country and the best country, globally for decades to come. But, as we talked about the problems earlier, we've got some challenges, right? If we keep going the direction we are. And
so we need to find a savings device that makes sense and stores value over time. You found it, and it's given you the ability
Yeah.
to have freedom and choice in your life.
That's
all it comes down
That's
to.
the key.
Yeah.
So, ask yourself what you spoke earlier about what is finite. That is time. Your time is finite. And, what are you going to want to do at 65 and 70? Your ability to travel, your ability to enjoy things at those ages are different to what they are when you're 50s or your 40s or your 30s. So having the balance is critical. And, you see so many people retire into their late 60s, but they're quite ill. They don't have the ability to enjoy much.
You need an investment strategy regardless of whether or not you invest. So we talked about that, whether you keep it in the bank or the investing or Bitcoin or a house.
Yeah.
So practical steps. My practical step was read all the books, dump all the money in. That's not for everyone. That's not normal. That's not a normal approach, and I fully recognize that.
Correct.
So some other practical steps might be, do you have advice for people?
Yeah, like I would say, if you have a investment strategy, ask yourself, is something like Bitcoin, can it fit in? And I would say, if you have a savings mechanism, add this to your savings mechanism, and what they call is, averaging discount,
dollar cost
averaging, DCA.
Yeah.
And all that, that's a simple thing, whether it's $10 a week, $20 a week, $100 a week, whatever someone can afford. Start that process, because one thing that's amazing about Bitcoin, it's divisible. One Bitcoin is divided into 100 million Satoshis, or sats, as we call them. And so you can buy a fraction of a Bitcoin, and you'd be surprised as the price appreciates, the value appreciates accordingly. So, buying $10 today, in 3, 4, 5, 10 years time, you might see it doubling in price. And if you've continually bought that at different price points, it can make a material difference, 100%.
So practically speaking on that, there are ways you can do that. If you're looking at an ETF, whether you start a ComSec account or a superhero trading account, there's differences there. I have talked about them before, but the ComSec account, you're going to be paying brokerage. So if you are, practically speaking, going to make a $20 purchase and you're paying $5, $10 brokerage, it doesn't make any sense. So practically speaking, you want to, whatever savings that you decide initially, I'm going to start with, $200, $300, $400, $500, create this ComSec account, buy the ETF, Google it, IBTC, there's a few of them, then start learning about it, then watch it, then track it, then you're incentivized to learn about it. The only way to start is to do it that way. Otherwise, you will never get started. It's scary at first, but look at that $500 as an investment in your education and learning about it. That's how I suggest to people to start if they want to start.
So I'm a self-sovereign person.
Right, which means what?
So sovereignty is very important to me. So having choice on where I'd like to live, how I want to conduct my finances, to me, that's something we've earned as a family, and I want to be able to choose how I buy my Bitcoin and how I store my Bitcoin. So I would encourage people to learn about that process. It isn't as difficult as what it seems. I'm not a tech guy, so please don't think, but there is so much information out there around being able to purchase. It's simple as, from your bank account, transferring money to some exchange like a Bitaroo, which is a pure Bitcoin play.
Getting your account blocked, solving that problem, that does happen.
Yes.
It does happen, but
limits on that. Yeah,
it's easy to fix.
Yeah, correct. The banks will always say to you, you haven't done this before. Are you sure this could be a scam? And they come from a genuine place. At the same time, ironically, they're not as secure as anything else. But once you overcome that, if you get your $5, $100, $500 across into Bitaroo, you can set up a constant purchase of Bitcoin, or vice versa, just do a one-off and do that on a weekly, monthly basis. The benefit of the self-sovereignty is, firstly, your fees that you get charged are really minimal, and you actually are able to then move that. Think of it as money in your wallet, which is the exchange, and then money in your account. So then you move it to a cold wallet, as it's called, and that is off the exchange, where it requires more security, which is a PIN or in this case, a 12 or 24 seed phrase that protects it. And the beauty of having something like that set up is over time, you keep adding to it. It's the natural thing of compounding, right? As you just add small amounts.
Yeah.
And we know the scarcity of it. We'll talk more in detail about those attributes. But as the price appreciates, the value of what you hold. And I remember someone saying a few years ago, I can't remember, I should find the quote of it, but value Bitcoin as though it's 10x today.
Yeah, yeah.
So
in terms of how you secure it, how you treat it.
Yes.
Right.
So let's take that. Understand that. So if it is $170,000 Australian today, treat it as though it's 1.17 million per coin. So why? Because that's exactly what it's done over a 4-6 year period.
Yeah.
It's 10x basically what they call this per cycle. Now, will it repeat itself? Listen, I can't. None of us can. But history tells you where it's at. Now, it might be a longer cycle that it does something like that. But if you have the view like that, then you treat it accordingly. You are securing yourself, your family, and future generations, and then you will learn more about it, and you'll spend the time to learn more. And that will naturally happen. It's naturally happened to me, that's for sure.
Yeah, yeah. You become addicted to it if you find value in it, and if you buy it and you don't find value in it, so be it. That's the ability of a free market and a self-sovereign individual to make choices with what they want to do with their stored savings, their earned money.
Just understand that Bitcoin is the 6th, 7th largest single asset class. When we consider gold at sort of the top at 22 trillion thereabouts, we then have the mega caps, Nvidia above that, and then you have Microsoft.
So on that, in terms of gold, people will often say that there's nominal bias in that I've missed it. It's 170,000. I'm too late. Damn it. I heard about it 10 years ago. Damn it. I thought that too, but then I had the conviction. You will have to find the conviction somewhere. So in terms of how can you distill the myth that you're too late?
Yeah. I think Bitcoin is, I think you mentioned it earlier, how it flips things on its head. So when you look at traditional finance or which people call TradFi, if you hear that phrase, or share market investing or investing generally, the higher the price goes, the risk return is reduced. So the risk rises and the return notion falls, right?
Yeah, the idea of it going to zero is almost out of the picture now, whereas 5 years ago, it could have gone potentially to zero at a $200 to $500 billion market cap, maybe. But now, with Wall Street adoption, $2.3 to $2.4 trillion asset, it's less likely to go to zero, and the volatility is lowering too. The big spikes, the big 50%, 80% drawdowns, I think are gone.
Yeah. So Bitcoin has this innate way, it actually flips traditional finance on its head. And so when we're looking if you're looking at purely on a graph of price appreciation, like we all want to invest into something that has price appreciation, right? Let's put that clear and out on the table, no matter who you are. It's just human psychology, right? So put that to the side. When you're buying any traditional asset, a property, when you're buying something like a stock or a company, and it's trading on a multiple of its earnings, and that multiple is far higher than what the average is. So Nvidia is a good example. That might trade at, say, 70 times its earnings. So in other words, it will take you 70 years at the current rate of earnings per year to get all your money back that you're paying when the average is 16 or 17. So you're paying overs the entire average, right? So it's higher risk. So your probability of getting greater returns requires Nvidia to continue to outperform. Now, the whole chip industry, I'm not clear on that. AI is evolving, clearly high demand, and it's priced accordingly because it's a big beneficiary. How long that continues, time will tell, right?
And let's just go back to the government for a second. They can just come out and say, hey, we're going to invest in American-only chips. Here's $500 billion. All of a sudden, Nvidia goes, oh, that's our main buyer. A centralized entity has made a decision and it has cut the market cap of that company. Now, it hasn't, but it could.
Absolutely.
It could cut it 20%, 40%,
I mean,
50%.
China could have a chip maker who they haven't made clear that is a clear competitor that will eat their market share because their dominance will. Now, it's very hard. Like what they've created, what they have is something very special, and that's where it sits today. But conditions can change. You mentioned before, conditions can change. So as an investor, I've got a choice. I can either not sit and play that game at all, so leave that investment, or I can play it and I can say, well, I expect that to continue. But my returns, I will be honest about saying they're probably not going to be a doubling and a tripling like we've seen, or quadrupling like we've seen in Nvidia historically. Why? Because trees don't grow to the moon. It just doesn't work that way in traditional finance. Bringing it back to Bitcoin, what we've seen in Bitcoin, for those who have followed it for a number of years, and the good thing about today is it still presents itself as a great asymmetric return, is that as it's grown in price and its size grows, it attracts different pools of money. And this is really important to understand. And this is why we're still early on the journey, that it's tapping into now huge pools such as the bond markets. So the markets that fund the US governments and fund governments globally,
insurance companies,
pension funds, company treasuries is now coming on the scene. So companies that have cash on their balance sheet, instead of keeping that cash, that money in cash at 2%, 3%, some of them are allocating a portion to Bitcoin because they see that appreciation or understand it better. And there's some pure companies that have been created just as Bitcoin companies. So you're seeing this evolution in traditional finance that hasn't really been challenged before. And so we have been really early, in other words, yourself and myself and many who have been in the space, and those,
and felt late. When we entered, we felt
you always feel late.
Yep.
Let me make that clear.
And you buy it?
When I've been able to purchase small parcels of Bitcoin at 23,000 Australian, I felt late. I felt it was expensive. I felt it was expensive all the way through as my purchases occurred. And I feel that today it's expensive. But what you realize, the reality is that Bitcoin continues to tap into different pools of capital. And if we go back to our principles, and that is, what is money? It is becoming a form of money. It's not just a store of value. It's becoming a medium of exchange.
It's not a currency. It's not something that can be printed. It's the hard underlying denominator of the fraction.
So a medium of exchange, in other words, who just came out? Jack Dorsey of Square, right? So he's going to enable all the Square terminals globally I should turn them on, at intervals to transact in Bitcoin. So, and he's a Bitcoiner, and someone who's, positive and a contributor to the. So
just some background on Dorsey real quick. Yeah. He was one of the inventors of Twitter. Twitter was based around the idea of free speech.
Yes.
That's why it's impactful too. Free speech, and he's saying Bitcoin is free speech as a money. That's why it's relevant.
Absolutely. I think he's behind Nostr, which is the Twitter equivalent. Decentralized. It's not a centralized, because remember Twitter is owned by Elon, and at any stage he can just shut you down. So so going back to Bitcoin and how early we are. Well, yes, it has appreciated, but like a saying goes, there's still much more upside to come, because when you look at the asset class or asset classes globally, the pool of money that we're sitting on or is available to be tapped into equates to around 900 trillion to 1,000 trillion. Bitcoin's market capitalization, as you mentioned, is 2.2, 2.4 trillion, thereabouts. It sort of jumps around a little bit. So it's very early. So
it's 0.2% of the global assets available.
You know,
0.2%.
The way I explain is my first target is something I would look Bitcoin to challenge is gold. And gold is a 22 trillion. Now, gold will continue to grow as Bitcoin grows, but I think Bitcoin's rate of growth and adoption, because of its adoption, will be faster. So in other words, 22 trillion, it's got the ability to 10x from here as the first target mark. You know, whether you're a power law subscriber or whatever it might be, what period of time, I suspect that will occur in the next 10 years or so.
So if you compare Bitcoin to gold, 2.2 trillion, let's say, versus 22 trillion as the size of the asset class, it's like a toddler when they start growing. They have the ability to grow quicker than the 20-year-old. The 20-year-old might grow 2 inches, but the toddler's grown a foot, 2 foot. And
that's a great analogy.
Because it's so small, it has the ability to grow bigger. That's the S-curve adoption. Once it gets to the top, it cannot go any further. Gold at 22 trillion, maybe it doubles, maybe. That's going to become 40 trillion out of 1,000 trillion.
It'll be a whole lot more than that by that stage. Yeah, that's right.
So, but Bitcoin can 10x because of its scarcity.
Yeah.
Gold is inflating. They discover more gold each day.
So you've got the last cycle that just happened when we halved the Bitcoin subsidy, and I'm sure we'll get to that later, but has now made it more scarce than gold. So we flipped gold, and gold has the ability, you can turn more gold on. I mean, it is harder to extract that process, but it became more scarce than gold. Now, that'll continue over as each four-year cycle continues, where it halves. And I think the price accordingly will rise.
And the volatility continues to dampen on that because there's less Bitcoin being mined and forcibly sold to keep the mining operations running. So as it continues to halve, this is why the Bitcoin gold rush, according to Michael Saylor, from 2024 to 2032, by 2032, every 10 minutes, a miner solving that algorithm, solving that puzzle, will be rewarded with less than 1 Bitcoin, which means that's a third of what we are now being mined.
That means 99% of the Bitcoin's been mined.
Yeah.
Because it's only 1% left.
Yeah.
So, it is. I think Jack Dorsey's a real strong belief is it needs to become a medium of exchange. Now, for many of us, it's been a store of value and will continue to be. The medium of exchange and what's being built on Bitcoin is another fascinating, I suppose, topic and of interest to really open up, because I think we underestimate the investments that are going into Bitcoin on the second layer and third layer. So our traditional finance system has layered approach. So we have the base money or Fed wire sitting at the base, and they have multiple layers. And things like PayPal and MasterCard and Visa all sit at different levels, as well as the banking system. So I think at some point it's good to go into how Bitcoin will challenge that system of play.
Go for it.
It's sound money, right? So when you're dealing with pure scarcity, it's not a fractional reserve approach. Now, could that change? As in, are we seeing products evolving that involve not rehypothesizing, like not giving someone your Bitcoin and then they sell it to someone and it's just like a dollar gets loaned out, or gets created and get loaned out. It's more around,
That's been a problem. That's why gold was useful. Even though they've only got one thing of gold, they've lent out 5 certificates. We need a central bank entity that can make sure that if people want to get their gold out, we can print some more paper certificates, lend them the certificates to make sure that we don't have a collapse and a bank run, because that's a bigger problem. That's how central banks were actually created, early 1900s.
That's the purpose. That's right. Yeah, in the 1900s to assist with that. So I think that's
a problem that Bitcoin solves.
Yeah. So Bitcoin's, I suppose, where it is in its journey is the great way and the way. For those who want an in-depth discussion around it, is it sits at the base of a multi-tiered financial system. And just like FedWire sits at the base of pretty much the US and the global economy, where the major transactions occur at the base layer, right? Then above that, So what do we talk about major transactions? It's probably in the Fed wire, it's the Reserve Bank of Australia and the Fed Reserve and how they transact and allow liquidity for banking system. And then they transact with the likes of MasterCard and Visa. But these are all transactions on the ledger, right? It's a ledger-based system. Bitcoin sits at the base layer, allowing Lightning Network to function above it and allowing other things to be built above that.
Yeah.
And so you don't need to buy a coffee and transact on the Bitcoin base layer. You transact on the second layer or third layer.
And that's a lot of these are being built. And that's because it has less fees and it can be instantaneous.
Correct.
Because the Bitcoin network is the sound money underlying these other systems built on top of it. Just like the internet is the fundamental bottom layer of then building your website on and payments on and YouTube on and all different apps atop it. Bitcoin is the underlying money, like the internet is the underlying system of connectivity.
Yeah. And you've got to remember that people, if we go back 25, 30 years, so the 1990s, there were people questioning, no one will be buying goods on the internet. Who's going to give their credit card details to someone online? It was a serious concern, right, around security.
Now you don't even think about it.
And we find ways to, like, the good thing around human, evolution, and you look at, electricity and the evolution of the wheel, and you look at, different forms of money. We evolve and we adapt. And when that becomes the norm, we see the adoption just absolutely escalate quickly. So, for a lot of us, that's not a world we live in. I think we spoke offline earlier, we need to recognize that, a significant portion of the population are just going to work, completing their tasks, adding value to the economy in their own way, and then coming home and having all these different elements that they've got to deal with at home, and thinking about what money is and the savings and investment strategies. Okay, they might have a thought about it, but never being able to sit down to really.
Where do you start?
Correct. Where do you start? So, I think just going back to the original question is we are very early, and Bitcoin's life is from 2009, so it's 16 years. And it has never been corrupted. And if there's something if you can show me something that has not been corrupted, that is a monetary system that's going around today in the existing world, it would be hard to find. Yeah. It would be hard to find. And it is stronger than ever. And we'll get to a lot of the real attributes Bitcoin has. And it's functioning as strong as ever.
Let's do that now.
The last 2 years, 5 years, whatever it is, for us, it's been prosperous, but it's not like the journey's end. It's actually so early in its piece that I see the next, for the rest of my life, this journey being, a real enjoyable experience. And that's what life is, man.
Yeah.
Life is that.
It's the purpose and meaning that now you can potentially find in guiding others to find something useful in their life.
And contributing in that way. Like, if it does become something that can compete with gold or greater, then my contribution will be able to be greater.
Yeah, exactly.
There's only so much, you got to be content, right?
What are you going to do with your time?
So that's what Bitcoin's enabled me to do is like, and I say this to my wife, like, why are we working? Why are we, what the fuck? When will you stop?
Yeah, you won't.
Because the government have mandated that you can retire here, that's when you're going to retire.
Yeah.
So what happens if I can't retire there because I haven't been able to put my money to, you know what I mean? Like, so then I've got to work when I'm in my, so like it plays with your mind, right?
Yeah,
because at some point, can they fund everybody? The Americans can't. So like, something's going to give.
Yeah. Yeah. I mean, look, let's touch on the technology behind Bitcoin, clarity behind it, and we'll dispel some myths